Guys, what's up guys, welcome back to my channel. Right, so today I'm back with another strategy that we can actually use to trade from 1000. Right, that we can use to trade from 1000. Right, so the strategy now, I'm actually going to be explaining how we can actually scalp. Some have been of the opinion that the pattern does not work on boom and crash. All these bullish flag, cup and cup and cup and shoulder, or what do you call it, head and shoulder flag, bullish flag, bearish flag, all these triangles, symmetrical triangle, wedge, edge and fall. And so I'm actually going to be explaining how you can actually trade those patterns on boom and crash. Right, some are a bit of the opinion that do those patterns really work, do they really work? But as a matter of fact, the best pattern I've actually seen that works perfectly for boom and crash that I trade is the M and the W pattern, and also the V. Right, so for the pattern I'm actually going to do justice on the pattern now, because the major pattern I've actually seen that works perfectly on boom and crash has always been the W pattern, the M and W, and then we'll have the V. Right, we'll have the V pattern, and we also have the A pattern. Right, so those are been the pattern that have actually worked perfectly, that I've actually tested, and it works perfectly on boom and crash. So I'm actually going to be doing justice to how you can trade this pair, how you can trade these patterns profitably using boom and crash. Right, using boom and crash. So to actually be very proficient, very profitable and efficient in trading this pattern, you might really find it very difficult to identify on the main chart if you are not really, and maybe your experience is not really that wide and you've not really mastered the craft very well. So actually make it very simple and fun by adding some indicator that will be able to see those patterns for us easily. So meanwhile, if you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. Right, so, and at the same time, please, I would actually beg you, please, as you like the video, that you comment, please do well to share. You can share to as many people as possible. You can share on Facebook or share on Telegram, share on WhatsApp. I would definitely appreciate, and you can share on Twitter too. I would definitely appreciate. That will be the best way you can actually help back the good, the if really will actually been able to help your trading career, will make you more profitable with our strategy. So the best way you can actually return the favor back is by sharing this content as many as possible. You can actually even share it on your WhatsApp status, on your Facebook status, even Twitter. We do appreciate it very well. We're definitely going to appreciate it very well. So the pattern that I actually said we were talking about are just three or two, right? And we can call it four, because we have both four. We call it four in time that we can actually talk about the bullish trend, the bullish version of it, and the bearish version of it. Will make it four. Right, but ideally there are two patterns that I've actually seen that works perfectly on boom and crash. Right, it's not as if all those head and shoulder, double bottom, double top, it works. She understand all this call head and cup, or what do you even call it? It works perfectly. But the one that I've actually tested and I can beat my chest on it, that is these four patterns, which are the W and the M, and we have the V and the A. Right, so I'm going to be doing justice to this thing. So the best time frame you can actually see this is going to be on our 15-minute or our 5-minute time frame, to be very efficient. It's not as if you can't find it on 1 minute time frame. Of course you can find it on 1 minute time frame, but if you really want to filter the noise with this strategy, with this method, I would strongly advise you stick to 5-minute time frame. With that, you can actually be able to filter the noise in the market, and you trade this pattern profitably, and you are gonna appreciate this. So without wasting much of your time, we're actually going to be using indicator. We are going to be using that is going to make this spotting or seeing this pattern easily for us. So, like the first indicator we're actually going to be using that we're going to add to our chart to actually make the spotting and trading of this pattern very easy for us is going to be. So, for those of you that are actually new to trading, right, you can actually click on this F here, right, and you can just tap on your screen. You will actually find what's the F here. So whichever one that is convenient for you, just click on it. So you click on this F, right. So I've added the indicator on our chart, right. So the first indicator, now we are not using any indicator on our main chart. We are strictly not using any indicator on the main chart. So it's just going to be the indicator window alone. It's going to be the indicator window alone. So it's just going to be the main chart alone. And for easiness, I can actually still delete all those indicators, then I add it back, so that for those of you that are new to it, right. So once you click on this F plus here, click on this F plus here, then the first indicator we are using is our moving average. So look for your relative strength index. You click on it, right. So the period is 14, apply to close. The style is 3 pixels. You can use any style of your choice, but the level we are going to be using now is going to be the 20 level, the 80 level, the 50 level, the 32 level, and the 68 level. So these are the 5 levels that we'll be using. Yeah, these are the 5 levels that we'll be using. So the 50 level can actually make it our partial entry or take profit entry or exit, right. So and why the remaining partial entry or partial entry, all right. We can do partial entry, right. Why the 20 level, the 32 level are buy levels, then the 68 level and the 80 levels are they are also our sell levels. So once you are done, you click on done, right. You can see this is what we have on our chart, right. So you click on this F plus again, right. So you click on this F here, F plus, you click on this F here. So you click on this F here, F plus here, and not this, right, and not this, because we are not using anything, we are not adding any indicator on our main chart. It's strictly our indicator window 1. So you click on this F plus here, and then you look for our moving average. So the first moving average we're actually going to be using is the period is 2, shift is 0, method is simple, apply to previous indicator data. Please take note of this. This is very, very important. Right. It's very important, right. Take note of it. Apply to previous indicator. That means you're actually applying the whatever data this moving average is going to fetch for us is going to be based on the first indicator data, which is our previous indicator, which is our relative strength index. So take note of it. So once you are done, you click on done. Once you are done, you click on done. So the final indicator we're actually going to use is going to be our moving average, but this time around now the period is going to change. So we click on this moving average. So now we are now using we're using the period 7, then change the color to red. I will change the color to red. So once you are done, they apply to indicate previous indicator data, right. Take note of that. So once you are done, you click on done. Right. So finally, this is what we are going to have on our chart, right. So now let me explain how you're actually going to use it. So remember that earlier I said that the first pattern we're actually going to be trading is our W and our M. It works perfectly now. So I'm actually using boom 1000 for this now. So for boom 1000 now, we actually use it to catch spike. You can use it to catch spike, and you can use it to trade the reversal pattern, which is actually the sell. Right. So if you are taking this buy now, right, you can actually see at this area now we have our W, right. We have our W pattern. You can see you can actually spot it very well on our what, on our indicator window. This is the first leg and this is the what, this is the second leg. You can see a very perfect one. So the moment you have the first spike, right, the moment you have this first spike here, you can actually enter here, right? You can see the first spike, right? That was what confirmed what the second W for you. So now to filter the noise in this indicator now, now, right? So what we'll use is that now this is where the levels that we have on our what, on our RSI now comes in place now, right? To be at the safer side, since we're actually using the 5-minute time frame. So if we are using the 5-minute time frame now, right, the first leg of this W, if it actually enter this 20 level, no problem about it, right? But if it doesn't enter, right, once it's around around this 20 level, right, a perfect one will enter our 20 level, right? But whichever the case, once you have the second leg above the 20 level or above the 32 level, you can conveniently take the trade, right? You can conveniently take the trade, and once it hits your 50 level or your 68 level, you can choose to exit the market, right? You can choose to exit the market, right? So that is it. This is another example here. You can see this is another perfect W. Now, so if you find it very difficult to identify your W, right, on your main chart and even on your indicator window, now you can actually switch. You can switch your candle from line chart to line chart. You will be able to spot the W. You can actually see, right, this is multiple W. So if you miss this first entry here, you can actually re-enter there. As you can see, you can actually re-enter here. So it's all about you taking your time to practice very well. This is another W here, right? See, this is another W here, right? So it's all about you just taking your time to practice very well, right? Meanwhile, if you are here to subscribe to my YouTube channel, you can do what? Please hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. And please do well to share with friends who really appreciate that, right? We really appreciate that. So to be at the safer side, let me give you a pro tip now with this W, right? Let me give you a pro tip, right? So a pro tip I'm going to give you is that when you are the first leg, right? For the first leg now, right? No, we have W like this. So for the first leg like this, the spike, right? If you are taking a buy, right, the first leg is always going to be a sell. Right? So the retracement for the first leg now is going to be a spike to the upside. And so once you have that, so the retracement here, I remember we're entering at the second leg here. Right? So at least the retracement will be 10 to 15 pips. Take note, the first leg must be 10 to 15 pips, right? 10 to 15 pips. Right, so let's measure those ones that we've actually taken now. This is the first leg. Look at the retracement now. You can see we have 17 pips. We have 12 pips, So that is telling us that okay, we can conveniently take the second leg the moment it forms at our power level here. Right, the moment it forms at our power level here, right, you can see we have 12 pips. So you can conveniently take it here, right? You can see your W here. And you can see that the first leg is this is 12 pips already. So you can take. So once the spike up, which is giving you the first leg, right? It should be between 10 to 15 pips, right? 10 to 15 pips. Right, this is the first one. Look at this one here. Right, look at this one here. This is our first leg, right? So you measure it. What do you have? So you actually take it down and we'll measure it here. Right, this is the beginning of it, right? And actually see we have 13 pips. So a pro tip is that if you are taking your M's or your W in the market, the first leg, right? The first leg should be between 10 to 15 pips. So remember to have that, you can take your entry. So for those of you that understand price action very well now, right, by the time you actually look into this now, right, by the time you look into this section here, right? Let me just analyze. This is our what? This is our higher high. This is our lower low. This is our higher high, right? So at this area now, if you want to enter, which is our second leg of our what, of our W now, for those of you that know your price action very well, institutional price action, you can put into consideration your order block, your break in market structure now. So if you actually want to identify this area here now, that you want to put your entry to minimize your stop loss and use a very word, because one thing SMC, one thing smart money has actually done for you, that you can actually give us the time leverage to be able to use like 1 pips to 3 pips stop loss, and we will be secure in the market. So if you actually want to use something like that now, all you need to do is just for you to go back to this area here. This area now, let me mark it with a rectangle, and then we'll go down to, so what we'll do is that so what we'll do is that at this area now, this, remember that this is our lower low, and this is our break in market structure. So we're actually going to be targeting any other block that is around this area here, and that is going to be our entry. So what I'm going to do is that I'm going to mark this area out. I'm going to mark it out. Let me use my rectangle. Right, let me use my rectangle. So this is the area that I want to put into consideration. Then I'll go to my lower time frame, which is my 1 minute time frame. So what I'm going to do is that now I'm going to, this is, if you actually look at now, this is the rectangle now, and this is my midpoint. So I'm going to drop an horizontal line at this midpoint here. Then at whatever other block or whatever PO that I'm able to spot at this low here, I'm going to what, to use it as my what, as my PO that I'm going to use to enter the market, so that I can reduce my stop loss. So what I'm going to do is that, let me just put an horizontal line there to signify my what, my midpoint of this range. So let me go to my 1 minute time frame. My 1 minute time frame. Okay, here we go. Right, here we go. So remember now, this is my entry area here, right? This is my entry area. So the moment I have this now, I'll actually have this on lower time frame now. On the lower time frame now, this spike here now, this is my words. This spike, this little retracement that I have here, it is going to be my PO high. It is going to be my what, my PO high. So what I'm going to do is that I'm just going to mark it out with a what, with a rectangle, right? So I'm going to mark it out with a rectangle. So the moment price going back to this area, I'm going to what, put my limit there, right? I'm going to put my limit there, right? I'm going to put my limit there, and I'm going to use 2 to 3 pips stop loss. So I'm using 2 to 3 pips stop loss. Let me use my rectangle to draw the 2 to 3 pips stop loss. You can see that we have 1.8, 1.8, right? So I want to use 3 pips stop loss. So that's 2, 3. You can already look up here. So my 3 pip stop loss will be here. Let me use the cross bar. Right, so if I'm entering here, so my 3 pip stop loss, this is 1.2, right? This is 1.2, and this is my 2 pip stop loss. You can actually see. So that is what I'm going to be using. So we can see that they didn't even go more than one. How many pips they even said? 1.1 pips. Let's say 1.2 pips pipette with a 2 pipette. So that is one thing SMC has really done for us. That's one thing SMC has done for us, and trading pattern will have done for you once you understand your word. Now, to actually break this down, now you can see that we have a break in market structure here. So after this break in market structure, this spike that pick up, that break this market structure, all we just need to just wait for a retracement down to to our discount area, and then we can easily buy up. Right? So that is that. Let me clear all this thing. So for crash 1000 now, let me do a practical example for you on crash 1000. Right, so for crash 1000 now, remember on crash 1000 now, we're actually going to be taking the what, we'll be taking the reversal side of this. We're taking the reversal side of this strategy, right? We're taking the reversal side of it. That means we'll be taking the what, the M in the market now. So for us to take the M now, you can see that this is a perfect example here. You can see this is our hem. You can see this is our what? This is our hem here. We have our hem here. So all remember the same rules still applied. The first leg, the rotation of what? 10 to 15 pips. right, 10 to 15 pips. So once it's above that, you can actually take your what, you can take your entry, that you can take your entry. So after 13 pips here, so you are good to go, right? So do well to do your back test very well. Do well to do your back test very well. I don't want the video to be too long. So if you actually need more videos about this pattern that work on what, that works perfectly on boom and crash, you can actually drop in the comment section whichever pattern you want me to do justice to, right? And if you still need more deep explanation about this pattern, one of the major pattern that I trade is the what, is the M and the W pattern, because they are very profitable. Once you are able to spot it, you are good to go. It can give you 50 to 200 dollars depending on your account size and depending on your risk management. So let's keep making the riff, and meanwhile make sure you apply a proper risk management. Don't go and use a lot size that will kill your account, that will blow your account for you. See you guys next time.
What's up guys, welcome back to my channel. Alright, so today I'm back again with another strategy that we can actually use to trade crash 300 crash 300, boom 300, and crash 1000 stolenly. Right, so the strategy is a very simple one that we don't need much indicator. We are just using two indicators, and the two indicators that we are using are a very leading and very powerful indicator, right? So meanwhile, if you are new to my YouTube channel and you are yet to subscribe to it, please hit on that subscribe button and make sure you turn on the bell notification so that you stay updated each time I'm dropping a new content, right, a new video, right? And if you are yet to join my Telegram channel, you can actually join the Telegram channel. You will find a link in the description of this video. And if you actually need any app based on trading or whatever, you can actually still check description. You'll find my contact there. You can send me a mail or you actually message me on Telegram or WhatsApp. And if you are very fortunate enough that we are in the same region, you can actually place a call. But please be mindful of your word. Don't take my simplicity for granted, right? So without wasting much of your time, guys, the strategy is a very powerful one and very cool. You can use it on crash 300 and crash boom 300 with crash 1000 solidly, right? So the strategy is a very simple one. Without wasting much of your time, I'll be going into how the strategy works. I'm going to be dropping the settings of the strategy in the middle of the video, right? So but meanwhile, before we go there, let me go on how it works, right? So we are using two indicators. This is the first indicator here and this is the second indicator, right? This is the second indicator. So basically what we're actually looking at is just this, right? Let me start from here, right? Let me start from the beginning. Right, so we can actually see the recent one that we have here, right? This is crash 300. So what we're actually looking at for, I know you might have come across it, probably you might be trading it or you've heard about it, you watch a video or you actually read a PDF that the market moves in M's and dots and W, right? So we're actually going to be trading the W pattern, right, with this strategy. Now we are trading the W pattern with just two indicators to confirm for us, but the pros and cons of this strategy is that we are just trading the W's, right? So for crash 1000, we all know that we are going to be buying, right? So if you're actually buying, that means we're actually taking a W, right? That means we're taking, so if you are buying now, that means we are taking the second leg of this W, not the first leg. So what we'll do is that with this indicator now, we actually wait for the indicator to give us our W, right? The indicator to confirm for price to confirm our W. But for price to confirm our W, now there are criteria to it. First and foremost, both the first leg and the second leg of the W must be below this our moving average that we have here on our main chart. So in a scenario like this is what we have. This is actually this is a W. This is our first leg, right? And this is our first leg. This is the retracement, and then we'll have the second leg, then we'll have the continuation of it. So you can actually enter from here and take your 5 to 10 candles, or 15 candles, or 20 candles, as the case may be. All right, as the case may be. Now if you are confused and you don't know what the actual W look at, now you can actually switch your indicator, your chart. You can switch it from, you can actually switch it to to line chart, to line chart, to line chart. So you can switch it to live chart, to line chart. How do okay, we'll have settings. Okay, so we can see it to line chart. So you actually see that this is a this is a W, right? So to be at the safer side, if you are finding it very difficult to get the W on your on your candle pattern, then you can switch to your line chart. You actually see it, right, and you appreciate it more. You can see this is the first leg. We have the retracement, right? Then we'll now have the the inducement again. Then we'll have the second leg that we're actually taking this now. Now the thing there is that when we talk about M's and W, or let me just limit it to M, right, to W now, because for crash 1000 is going to be W, but for boom 500 now, obviously is going to be what is going to be M. So when we talk about M and W, there are variation to, at least I know of 3 types of M, right, M and W that we have, right? So when we say we are taking the M's and W, you must know the variation and you must know the condition behind the 3 types of the W or the M that you are taking. You might be very more versatile than me and you actually know more than 3, right? So we all learn every day. Knowledge is not something you can actually keep. So if you actually need the videos on me explaining the M's and W, how they are formed, the psychology behind their formation, and how you can actually take them, right, you can actually comment in the video that you need the videos on M and W, and once I have like 50 to 100 comments on it that you need it, I'm going to drop a detailed video on how you can trade the M's and W pattern in the forex, not just synthetic indices. Now I'm going to enlarge it to, we're going to encompass it to volatility indices, and if time permits us, we can actually take it, we can extend it to currency pair too, right? So for this W that we have here now, this is a W that we call what do we call it? We call it we have the variation, the normal W, we have the normal M's and W, we have the advanced W, and we have the normal W, right? We have the normal W, right? We have our normal W, then we have the advanced W, right? And we have that's the two that I remember first. That's the two that I remember. So on this now, you actually see that this is the normal W that we have, right? This is our normal W, and this is our this is our advanced W. So you can actually see that the thing there is that this is still the same thing as this, right? It's just for you to know the variation in it, and whatever strategy you are using. I've always told you that you must be able to see your market structure in whatever strategy you are using. Your ability to see your market structure really goes a long way towards to keep it for you. Now if you look at this now, right, we had this break in market structure, right? We had this break in market structure. So the strategy works perfectly on M1 and M5 and above, right? So we have the break in market structure here, right? So after we had this break in market structure, we had a retracement, right? Now the retracement that we have now this is another break in market structure. It came took out this previous low. So once we have that, now we already know that we are in a downtrend. But as we are in a downtrend, we tend to have the retracement that we have there. What's calling me? Sorry. Okay, so guys, so when we did have the what, we did have the retracement, right? So we had this breaking market structure, right? Then we have this second breaking market structure, and this is another W, right? In W, right? But this might really be confusing for you. But the moment they take out this I here, right, you can actually enter the peak. We call it the apex or the peak, or whichever you want to call it. Once they take it out, you can actually enter for your buy and take it down. So that is the confirmation you'll be looking out for, right? That's the confirmation you'll be looking out for. So you have your what, W, right? So from here you can enter for a buy, right? And while you're actually entering for a buy now, you actually link to that's the first confirmation. Then the second confirmation is that the moment you are entering for a buy, right, it must be above the what, the second leg. Now if you want to enter for a buy, price must be above this moving average. So once price goes above this moving average, you can enter for your what, for your buy, and you can take your 5 to 10, 5 to 20 candles, depending on your account size, depending on your equity, right? Depending on your equity. So you can take it there. And then now that is the first confirmation. So the first confirmation is that price must close above this moving average once you've gotten your what, your W pattern for crash 1000 or crash 300. Once you've gotten your W pattern, so the moment the second leg close above the what, the moving average up, you can take your buy, and that is the first comment. So you can take your buy, and once this MACD, now this other indicator here, is actually above this zero level, then that is the last confirmation you must wait for. The second confirmation you wait for after you've seen your what, your M, your W, right, and price has closed above this moving average, right? So guys, just let me go back to my line chart so that we won't waste. So let me go back to my what, to my candlestick pattern. So you find it very difficult, so that's what you need to do. You can see this is our breaking market structure, this is our breaking market structure. So you enter here, and if you enter here now, all right, you can see that it is not yet at the what, at the zero level. So you can actually wait like two candles. So two candles will bring them what, will bring it up here, right? So one thing is that your MACD might be slow, but once, to be at the safer side, wait for this this line on the MACD to be above the what, the zero level. So this is one. So if you do your back test very well, right, if you do your back test very well, you have a lot of opportunity. That is one. Right. So this is another example here. Right, you can see you have the breaking market structure here, then you have your what, your M, your W, right? You have your W, right? So you enter from here and you take your 5 to 10 candles, right? You take your 5 to 10 candles, you can actually see. So you have your what, see, right? So from here you can enter from here, right? Even the moving average is actually giving you the W, right? Even the moving average is giving you the what, the W, see, right? It's giving you the W. So there are a lot of it. All you just need to do is just for you to what, to make sure you backtest. This is another example, right? You can actually see you have your breaking market structure, and you can see even your what, your moving average actually confirm the what, the W for you, and your what, your MACD is above the zero level, right? Your MACD is above the zero level, right? Your MACD is above the zero level, right? So there are a lot of opportunity there. So this is another example, right? So if you really want to enjoy this, I just make sure you backtest very well, and you backtest very well. This is your W, right? Even your what, your moving average to actually confirm it for you, right? So there are a lot of it. So for this is for crash 300 now. So for boom 300 now, right? So from 300 now, what we'll be having is that we're having a what, M in boom 300. We're having our M in boom 300. Right? So for boom 300 now, what you need to do is just for you to watch, you have this breaking market structure to the downside, and you have your M, right? You have your MC. Look at your moving average confirming this M for you. Look at your moving average confirming this M. You can see your M, right? You can see your M, and you can see your MACD is below the what, the -0, right? So that is telling you that you are in a down trend. So you can take your 5 to 10 candles, right? So if you enter after the close of this candle here, right, this is 1 2 3 4 5 6 7 8 9, right? And you have a spike. So if you are patient, you still have what, and you are still not taking out, right? You are still in profit even with the spike, right? You are still in profit, and you can take your what, your 5 to 10 candles. You don't need to be too greedy, guys. Don't be too greedy, right? Don't be too greedy, and then maximize your what, your profit, and what, don't think too much on your profit. Don't focus too much on your profit. Focus on what you'll be risking. Just apply good risk management, and make sure you do your top down analysis, right? Make sure you do your top down analysis. So let me share the setting with you. So for the moving average now, just click on this F here. So the moving average is what, the period is 13, shift is 0, method is exponential, apply to what, apply to close. The style is 4 pixels. You can use any style of your choice. So once you are done, you click on done, right? And then for the MACD now, so for the MACD now, we have the fast EMA to be 12, the slow EMA to be what, the slow EMA to be 26, and MACD SMA to be what, to be 2, to be 9, sorry. So let me give you a pro tips about this. Now look at this slow EMA now, right? Look at this slow EMA, that is 26. And we look at our what, if you look at our moving average that we are using on our main screen is 13. That means 13 divided by 2 will give us 2, right? So we actually double the what, the moving average that we have on our main chart, and our what, on, we double it. On our main chart we're having 13, right? On our main chart we're having 13, but on our MACD now we're having 20. That means 2 times of this, right? So on moving on our main chart, it is an exponential moving average, which is what, which is 13, right? So but on our in the MACD now is a slow moving average, 26. So at the longer run, by the time they are done with the calculation, it's still going to be what, it's still going to be an exponential moving average, right? It's still going to be a fast moving average to give you the what, the signal that you need there, right? To give you the signal that you need there, right? So once you are done, you click on done, right? So guys, do your back test very well. Let me see if I actually take an entry. You can actually take an entry. Crash, this is 300. Let's look at crash 300. Okay, we've gotten our first leg, right? So probably once we have another spike like this, then I can enter for the second leg now, right? I can enter for the second leg to take my what, my 5 to 10 candles. So guys, if you have any question, you can drop it in the videos. Please do well to like, comment, and share to other friends. Let's keep back test very well. Please do your back test very well. Knows what works for you, right? If it is the normal W that work for you, right, or the advanced W that work for you, know the variation, right? The advanced W will always take out the first leg, and that is why we call it advanced. So it's take the psychology behind that is that if it's taking the second, that means it's taking the stop loss of the first people that started buying at this area here. So that's the psychology behind the what, the advanced W. But if it is normal W, it is not going, the first leg is not going to be longer, the second leg is not going to be longer like the first leg. So that means what, there's liquidity at this area. So probably the next time you can just come and take it out, and then you have your what, you have your buy to the downside. So you just need to understand the pros and cons of whatever one you are taking. Maybe you are taking the normal W or the normal advanced W. So guys, let's keep, do your back test very well. Let's keep making deriv, and let's keep what, be patient with our what, broker. Trading should be fun. See you guys in the next video. What's up guys, welcome back to my channel. So today I'm actually going to be sharing a very powerful strategy you can use to scalp from 1000 and crash 1000. Right, I've gotten a lot of feedbacks from you guys on the envelope strategy that is really doing a magic for you guys. So this is another powerful magic strategy you can use to build your small account, right? You can use it to build your small account, and you can actually use it to grow your equity, right? The strategy is a very simple one, and it's a very simple one which you can use to trade from 1000 and cash 1000, right? Meanwhile, if you are here to subscribe to, if you are new to my YouTube channel and you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification, as that will really motivate me. And you can give a thumbs up and a like button. It really go a long way to help us grow.
Right, so for those of you that have actually gone through my envelope strategy, and for those of you that have gone through it, you can clearly see that it's actually a banger. Right, so I'm back again with another banger today that you can use to make your broker. You can use it to make your broker. So I don't want to waste your time. Right, the strategy works perfectly on crash 1000 and boom 1000. This is a scalping strategy that you can use to take 5 candles to 10 candles and 15 to 20 candles depending on your account size. Understand me very well, depending on your account size and depending on the kind of trader that you have, right? So obviously I'm going to be doing justice to the both condition that you can take 5 candles and the condition you can take 20 candles as the case may be, right? So we're actually going to be using 3 indicators for the strategy. We'll be using 3 indicators for the strategy. Let me walk you through how the strategy works. Alright, so we all know that for crash 1000, right, for crash 1000, when we talk about the scalping, that means we're actually going to be buying crash 1000 and we'll be selling crash boom 1000, right? The reason why the strategy works perfectly for these two pairs is that these two pairs are less volatile in terms of scalping. Understand my point? They are less volatile in terms of scalping, in the sense that our 5 candles on crash 500 on crash 1000 or boom 1000 will not give you the same thing when you take 5 candles on boom 500. So it makes them more volatile compared to the other boom and crash pair, right? And you actually don't need much. They tend to give you a long trend in the opposite direction, as in the sense that they tend to give you a long trend on scalping, right, than buying, right? So for since most of you are actually new to trading and you just need something that will give you a daily target of $10, $20, $100, depending on the kind of trader that you have and depending on the kind of equity that you have, right? So the strategy works perfectly for crash 1000 and 1000. So without wasting your time, let me share you the strategy with you. Right, we're actually using 3 indicators, a moving average on our main chart and 2 other indicators on our indicator window. So let me quickly explain the process for the strategy, the condition that we use to take our buy, right? The condition we will use to take our buy. So the first and foremost is that the strategy works out perfectly on 1 minute time frame, since it's a scalping strategy, and at the same time you can extend it to 5 minute time frame, but all boils down to you. Obviously, if you want to use 5 minute time frame, then definitely you are not taking 5 candles. Don't get that confused, because a 5 candles on 1 minute time frame will give you a single candle on 5 minute time frame. So if you want to use 5 minute time frame, then that is boiled down to you. You need to restructured your plan, your trading plan, suits that 5 minute time frame. If time permit, I will actually do justice on how you can use the 5 minute time frame and 15 minute time frame. But since majority are scalpers, so we'll be using 1 minute time frame, right? We'll be using 1 minute time frame, and basically what we'll actually be going to be looking out for is that would actually be looking for a spike. Then after the spike, and we'll go to our 5 minute time frame. You can actually see, so on 5 minute time frame, obviously you will not be taking five candles or five candles like I said, because five candles on 5 minute time frame, that's 25 minutes. So that will be 25 candles on 1 minute time frame. So basically what we'll be doing is that, you see this green moving average, right? This green moving average, right? It has to cross this red up. We have to there, right? Let me use another color. Let me use blue. Okay. Okay. So obviously you need to wait for this green moving average here and this red moving average. So the green moving average has to cross the what? The red upward like this, signifying that we are in a what? We are in a buy. Remember that on crash 1000 we'll actually be buying, not selling. So once the green moving average cross, so once the green moving average cross, um, once the green moving average cross, wow, so once the green moving average cross, so once the green moving average cross, okay, so we'll actually be waiting for the green moving average to cross the red upward for crash 1000. So once it cross the what, the moving average, the red moving average upward like this, so guys, sorry for the interruption, so once the green moving average cross the red upward like this is the first confirmation on our what, on our indicator window. The second confirmation is going to be coming on our what, on our main chart here. So all we'll be doing is that we'll need to what, to price has to be above this green moving average that we have here like this. Price have to be above it, right? Price have to be above. So once price is above it, like we have it here, you can take your what, you can take your buy here. And while you are doing that, make sure the green moving average has actually touched the what, the 20 level or the 10 level, as the case may be, for crash 1000, right? So once the two confirmation is met, then you can actually take your buy. Now to be at the safer side, a good strategy must have an entry and what, and an exit, together with what, together with your risk management. Now the risk management here is that once you enter, right, that you have the confirmation all met, the green moving average at the indicator window have actually touched the 20 level or the 10 level, right, and it has crossed over towards the red moving average at the indicator window here, right? And at the same time, that is the first confirmation. The second confirmation now is that on the main chart now, price is above the green moving average, then obviously you can enter for a buy. So to be at the safer side, you put your stop loss below the what, below the moving average, right, below the moving average, and the last what, the last swing. Now this is where the logic comes in place. Your market structure, you can't overweigh it, right? If I'm to analyze this thing now based on market structure, right, based on market structure, obviously this is what I'm going to be having, right? I Obviously this is what I'm going to be having, right? This is my last swing high, this is my higher high, right, and this is my higher low, right? And I actually recondition met up here and I want to buy. Obviously I'm buying at this candle here, right? My stop loss is going to be below this swing low, right, which is my higher low, right? And then I'm going to be targeting them taking out this previous higher high that we have here, right? So my take profit will be the previous swing high that we have in the market, right? So that is what my take profit will be, right? And my stop loss is going to be the what below the low, the swing low that we have. So once you take your time and backtest very well, you actually find out that the strategy works perfectly. This is another example here, right? This is another example, right? Your stop loss is going, look at now, you have the crossover here. All right, you have the crossover here. This was the last swing high, so your TP can be actually, you can actually take more than that, right? But to be at the safer side, just target the previous swing high, and your stop loss will be below the swing low. So if you observe very well, and if you do your back test very well, you always observe that your stop loss will be below the swing low, and price, and also is going to be below the moving average that we have at this main chart, telling you that no matter how your stop loss won't get hit, and your take profit would be hit, right? So some of you have actually been trading for more than 5 years, and you can actually see you've taken a trade whereby you set your stop loss, you set your take profit, and the trade actually hits your take profit. None of you has never gotten that, right? So do your back test very well. I do your back test very well. This is another example. This is another example here, right? This is another example. So do your back test very well. Make sure you follow the rules. See, this is another example here, right? This is another example, right? Your stop loss will be below this low, and your take profit will be here, right? You can actually see, no matter how you get, your take profit will get heated, right? Meanwhile, if you are yet to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. So this is another example here, right? This is your previous swing high, right? So you target this high, your take profit to your stop loss will be below this swing low, and your take profit will be here, all right? Though you can actually trade your take profit, and you can trade your stop loss depending on your account size, and depending on the kind of trade that you have. So this is for 5 minutes. So on 1 minute time frame, the same thing is applicable on 1 minute time frame, right? On 1 minute time frame, you will tend to get more entries than you will have it on 5 minute time frame. The only thing is just that on 5 minute time frame, the entries you'll be having on 5 minute time frame are more reliable than the one you have on 1 minute time frame. So that is what distinguish between whether you are using M1 or you are using M5, right? So that is for crash 1000. Then for boom 1000 now, right? For boom 1000, right? So obviously the reverse is the case. So on boom 1000 now, you're actually going to be waiting for a spike to happen. Then after that spike, right, your stop loss will be and above that spike, right? And then you actually wait for the green moving average to touch the 90 level or the 80 level, and it must cross below, right? It must cross below the red moving average. So once you have that, look at this is a perfect example here, right? Your stop loss will be above this swing high, right? Which is telling you this is what we have. Practically this is what we have: higher, lower high, lower low, lower high, lower low, right? So your stop loss will be above this lower low, right? The pro tip I'm going to be giving is that whatever strategy you are using, you must be able to read market structure from it. Market structure is fundamental in this business. Once you are able to read market structure in the right perspective, obviously your trading profitability would increase drastically. It's going to increase rapidly. So this is another example here. You can see after this spike up, right, you can enter. So your stop loss will be above this spike, right, which is your lower high, right, and your target was the lower low here, the previous low. You target this lower low, the previous lower low, as your take profit, right? So let me share the settings for you. So the first thing is that for those of you that are new, you click on this F here, right? So you click on this F here, you click on this F here. So the first indicator we are going to be using is our what is our moving average. The period is 21, shift is 0, method is exponential, apply to what? Apply to close. So for the style, you can use any style of your choice. You can use any style of your choice. Alright, so once you are done, you click on what? You click on done. Right, so you have it like this. So the second indicator we are going to be using now you click on this F plus here, you click on this F plus here. Right, so once you click on that, right, you the next indicator is going to be your what your our stochastic. So the K period is going to be 21. Now let me tell you one thing about this thing. One thing is that me, I will never give you an indicator that you don't understand the pros and cons of it. I've always told you, whatever indicator you are using, make sure you understand the pros and cons of it. Now if you observe the K period now, the K period is 21 period, right? Period is 21. Now the first indicator we added was our what? Was our moving average, which the period was 21. That means we'll actually integrate the moving average 21 in our stochastic oscillator to read the trend, right? To read the trend. So that is what we are using that for. Then the D period is 9, the slow period is 9, price feed is going to be low, high, method is going to be simple. Now the difference there is that if you remember very well, on the moving average, at this method here now, right, on the moving average it's exponential, while on this stochastic oscillator now is simple. The reason being that 21 moving average was going to be 21 moving average, simple moving average will give you a lagging, is too fast. Shall you understand? It's going to be too fast, so you tend to have a fade, signal. It's going to give you a fake signal, right? But with the exponential, now exponential is a little bit slower, so it's going to filter the noise in this first signal is going to be giving. So that is what we actually do with this indicator. We integrate both the moving, the fast signal and the what and the slow signal, then we'll filter it out with our what with our D period. So that is the pros and cons of this strategy, right? That is the pros and cons of this strategy. So once you are done, then the level now, the level is, we have 4 levels: the 20 level, the 80 levels, the 10 level, and the 90 level. Now the 20 level and the 10 level is going to be for a buy on crash. Then the 80 and the 90 level is going to be for what? For a sell on boom. So once you are done, you click on what? You click on done, right? So after that, you add the last moving average, which is our what? Our alligator. Right, for the alligator now, the job period is 9. Just follow the setting that we have here. Then the method is exponential, apply to median price, high and low, divided by 2. So once you are done, you click on what? You click on done. So and then you have your what? You have your chart like this, right? You have your what? Your chart like this. So guys, do well to backtest very well. Do well to backtest very well. If you actually enjoyed this video, please do well to click on that like button and subscribe if you are new to the channel. And if you are an old subscribers, do well to share with friends, let them also benefit from that. So whatever question, whatever comment that you have, you can actually drop it on the video. I will definitely respond. And if you actually need more info on personal mentorship, or you actually need an insight on signal, then you can actually DM me. You have my contact on the description of this video. And for those of you that are new, you can actually join my Telegram channel. You will actually have a daily, a constant update on what on the financial market. As we get the updates, we're definitely going to update you. So guys, see you well. Let's do it to keep making the reef. Let's do it to keep making the reef.
All right, guys, welcome back to my channel. I want to appreciate everyone there for your comments and your likes and for sharing my video, most especially the last video I did on levels. I say a very big thank you to you, and I will still be indulging or begging you to please keep sharing this channel and keep subscribing to the channel. Then encourage the people you share with to like and subscribe, and as well at the same time they should also share with their friend, as this is the only way you can be helping me back. Remember, I'm giving out this value for free without demanding anything from you. So the only way you can help me back is to like, comment, and subscribe to my channel, and also share with your friends too. And you endorse them to do the same thing well, as that's the only way you can be helping me back. So today, without wasting much of your time, I want to be sharing a strategy you can use to catch spike on broom and cash. And as well, as one thing about the strategy is that it's really give you an edge to trade on both way. You can use it to scalp to catch spikes on boom and crash. At the same way, you can use it to what? To trade in the reversal pattern. You understand? It is a two-way sword, two-edged sword. So without wasting much of our time, I would be sharing this setup with you. Once again, please remember to hit the subscribe button and make sure you turn on the notification bell so that the next time I'll be uploading videos, you'll be the one to get it, and what, so you stay updated. So without wasting much of our time, I'll be going to the setting of the indicators. So we'll be using the two indicators here. This is the first indicator window, and what's the other one. So the first indicator we're using is our moving average 13, and the setting is this. Moving average 13, period 13, method exponential applied to close. The style, you can use any style of your choice. You can use any style of your choice. And then the next moving average we'll be using our moving average 50, with period 50, method is exponential applied to close. You can use any style of your choice. Now the next indicator we would be using, which is our indicator window, is our RSI. The period is going to be 1, applied to close. The pixel is 2, and you have the levels, the 50 levels, the 10 level, the 90 level, 80 and 20 levels. You can use any style of your choice, right? Then on the RSI, the style on the RSI has to be the color of your background. If you look at very well, my background is what? My background is white. So that's why I'm making it white. Understand? That's why I'm making it white. So the next indicator we'll be using is this our envelope. The period is going to be 50. The shift is 0. Deviation is 0.618. Method is simple. Applied to what? Applied to close. So the upper band is going to be 2 pixel, and the color is going to be red, while the lower band is going to be 2 pixel, the color is going to be green. There's no levels there. Once you are done, you click on done. Right, once you are done, you click on done. Then the last indicator we'll be using is our the last indicator we'll be using is our what? Is our moving average also. The period is going to be 7, shift is going to be 0, method is going to be exponential, apply to close. While the style is going to be, you can use any style of your choice. You can use any style of your choice. So without wasting much of your time, let me explain how this strategy works. So the way this strategy works is that, you see, this is your envelope. The envelope we are using, we'll be using this indicator circle here, right, for confirmation, right? And we also consider our our main indicator window. So this is the what? This is the red envelope, which is our upper band, as we are doing the same thing, and this is the green. This is our lower band. So the way the indicator works is this is how you use it to look out for your setups. You can use any time frame of your choice, right from 1 minute time frame down to daily time frame as you prescribe it. But the only thing there is that The shorter the time frame you use, the shorter profit you make. As in, it defines the kind of trader you are. So if you are using a 1 minute time frame, you won't be able to take much. And if compared to when you are using a 5 minute time frame, you understand? So it all boils down to the time frame you want to use, right? But I would recommend you use 1 minute time frame for your scalping. As in, if you want to trade spike, just to scalp like 10, 15, 20 pips, use the 1 minute time frame, and the 5 minute time frame to take more, like 35, 30 to 50 pips or more upward. You can use your 5 minute time frame. So without wasting much of your time, this is how the indicator works. Mm, this is how the indicator works. I'll be using both 1 minute and 5 minute time frame just to backtest it for you, to as the word to explain the strategy for you. So the way the indicator works is this. Sim, this is your upper band. Let me start with boom now. Look at, this is your upper band. Anytime this is your moving average on your indicator level, this moving average on your indicator level, let me, okay, this moving average, right? This moving average on your indicator level, this green, black moving average, anytime is at this, what, if you are on boom, whether boom 1000 or boom 500, you wait for it to reach this 10 level. Though you can start anticipating for your what, looking for your buy entry, for your buy, for your spike from 20 level, but a refined one would be, sorry, so a refined one would be your what, would be your turn level, would be your 10 level. Let this moving average 7 on your indicator window to be at this 10 level, right? Before you place, you start looking for, well, before you place your buy, you start looking for your spike. And most likely, most of the time, that is the first confirmation you look at for. The second form of confirmation you'll be looking at for is this your green lower band envelope should also be at this 10 level too. It should be at this 10 level. It should be at this 10 level. So anytime it is at this 10 level, these two confirmations, this is confirmation you look for on your what, on your indicator window, right? The black moving average has to be at the 10 level together with your envelope. They also have to be what, your green lower band, your green lower band or envelope has to be at the what, at the 10 level. It has to be at the 10 level. So anytime it at this 10 level, you can start to place your what, to place your buy. They can cross, right? They can cross. But once the two is at 10 level, right, you place your buy. So the confirmation you'll be looking for on your, this is the confirmation you look for on your, that's the confirmation you look for on your indicator window. Now to your main indicator window, which would refine your what, your entry for you, as in it will refine your entry for you. So you look out for the what, the crossing of these two moving average, the 50 moving average and the 13 moving average, to what, to confirm your entry, as it's going to give you more confirmation, right? It's going to give you more confirmation. A practical example of it is this. Look at, you have your what, your, looking at this now, your moving average on the indicator window is around, is already on your what, on your 10 level, right? Together with your envelope, right? You can see it spike, right? But it spike, so you can start placing your trade the moment this moving average, right, is at what, at your 10 level. You start placing your what, placing your trade to, for a buy. You look for your spike here. So it this spike, you can see it this spike, and we have this. Then now there was a retracement back. You now have your 50 200 cross, your, sorry, your 10, your 13 moving average and your 15 moving average now cross together here, right? Your envelope is still at your what, look at, your envelope is still at this level here, at this 10 level here. So that was why you have this, look at it, that was how you have this 1350 cross. So you can what, place another buy here, and you have it like this. So normally you can wait till your moving average you reach your 80 level or your 90 level before you take it, as the case may be. But to be at the more safer side, I would advise you just take like 30 pips to 50 pips, right? Take 30 pips to 50 pips, right? You have the two moving arrow crossing here. Your envelope is still at your what? At your 10 level. Your envelope is still at your 10 level. You can see it here. Your envelope is still at your 10 level. Look at it. It's still at your 10 level, right? It's still at your 10 level. So that was why you can what? Enter for a long time like this. And you have 30 what? You take 25 to 50 pips as the case may be. You can see you even have more than that, right? You have more than that. You have 50 pips already, right? This is on 5 minute time frame. If you're on 1 minute time frame, it's going to be a little bit much congested. So you can use that is what you consider to look forward for your buy. Let me go on 1 minute time frame and still show you. The same thing is applicable on your 1 minute time frame. You can see your envelope is your moving average is at your 10 level. You have this spike, right? You have this spike. You have this spike. Now you have your 1350 cross again, right? Your envelope is still at your 10 level. Look at it, it's still at your 10 level. So that was why you can take this buy. And once you take this buy, you look at what you can take your 25 to 50 pips as the case may be. Guys, have 37 pips here. You have a 37 pips here. So that is what you consider for. And now the beautiful part of it is that the same thing that is applicable, right? You can also take your what the reversal pattern of this. So that's why I told you it's a two-edged sword. You can use it to what to trade spike, and you can use it to trade what the reversal on boom and crash. Look at now. You consider the same thing on your what you wait for your upper band Bollinger Band, upper band envelope to be at this 80 level or 90 level, preferably the 90 level. Then you what the moving average has to be at that level too. Look at it has to be at that level. It has to be at that level, and you can what you can conveniently trade your what you can conveniently trade. You can see it's still running, right? You can conveniently trade it and till your RSI, your till your moving average get to your 50 level or your what or your 20 level, or you have your upper Bollinger Band coming down to the 50 level or 200 or 20 level. Do you understand? So that is what you consider for on buy. Now to this is for boom. So on crash, you can use it on any time frame, but I would advise you just stick to 1 minute and 5 minute time frame. If you are going on 15 minute time frame, that means you are extending it. You are no more scalping again. You understand? You are no more scalping again. You are going actually going for a long time, and you can take more than 50 pips. You can take more than 25 to 50 pips as the case may be. Right. So let me explain it on crash too. We consider the same thing on crash too. Look at your crash now. Look at your crash now. Look at it now. So on crash now, what you'll be considering if you are taking the spike now is that you wait for this moving average, right, to get to your 80 level to 90 level. Probably it has to be at your 90 level, right? And this your upper band on your envelope has to be at your what? At your 90 level too. Look at you have it at this 90 level. The next thing you have is this spike, right? Is this spike. And you wait till, like I was telling you, wait till this. Look at your moving average now is at your 10 level already. It's getting to your 10 level already. And what? Your moving average is already at the 10 level here. So that was why you have this spike here. And you can see if you measure this spike now, if you enter here, since it touches it here, your entry will have been like here, right? You have like two candlesticks, and you can what take your conveniently 25 to 50 pips. You can see you have your 27 pips already, though it's still going to spike more, right? It's still going to spike more, but this is on 1 minute time frame. The same thing goes to it on 5 minute time frame. You can even see it now on the same thing. You have it what you have your envelope here at this 90 level, right? And the what and the moving average is also at 90 level. So you have this spike here. And if you are using it for the reversal, the same thing is still applicable to it. The same thing is still applicable to it. You can see it here. You have your moving average at your 10 level together with your envelope at your 10 level, and you can see the way it goes out. It goes out here. it goes out here, you can what, it goes out. So that is how you consider it. So for your entry, you have two entry to consider, entry confirmation. The first one is that you have to have your 1350 cross, right? If you are not getting your 1350 cross, then you wait for price to close above, to for crash 500 now, it has to close. If you are taking it for a sell, right, if you are taking for buy now, it has to close above your 13 moving average like this. It has to close above. So your entry will have been after this candle here. It will have been this next candle here. Right. Since you are not getting your 1350 cross, right? But your what? Your RSI, your moving average and your envelope is already at your 10 level. You can see it is already at your 10 level already. So you just wait for price to close below above 13. That means we want to take the reversal pattern of it. If you want to take the reversal pattern of it, right? So the same thing goes to your what? The same thing goes to you too on your sell. If you are looking for a sell, right? If you are looking for a sell, once you have it at this area here, you can always wait for price to close below 13. If it's closing below 13 before you take this trade, your entry will have been after this long spike here, all right? After this long spike here, and it's still at that region already. It's still at that region. Look at it. Your moving average and your envelope is still at the 890 level, you understand, and they are still crossing down, right? They are still crossing down, right? They are still crossing down. If you look at now, if you have taken your entry, okay, you wait for price to close, the spike should close below the 13 moving average, because you can't get 1350 cross, right? Your entry will have been on this candle here, and from there you can have gathered like more than 50 pips ESF, right? More than 50 pips here, because look at it, you have 51 pips already down to this area, and by the time you have 51 pips already, it was already on your what, closing down already. So guys, remember to hit the subscribe button and what, and subscribe to this channel, and also let me know any problem or difficulty you encounter while backtesting. I will indulge you to backtest this thing very very well before you go on your live account, right? Before you go on your live account, as the way of giving back and a confirmation, I will be giving another strategy you can use for accurate spike catching on boom and crash, but I will only be uploading that strategy by the time we are close to 100 subscribers. So once we hit the 100 subscribers, I will definitely upload another strategy you can what, use to catch spike that is more accurate, like 99.9% accuracy spike catching strategy. But before I will be uploading that, you have to share this video and share the channel. We have to hit the 100 subscribers. Once we hit the 100 subscribers, I promise I will drop in another perfect strategy that you can use to trade the boom and crash. Also, so guys, remember to hit the subscribe button, like and comment on the video, and as well you share to your friends. I still remain your humble self, trade with Modupe, making trading to be fun. As a matter of fact, trading has to just be fun. So until the next time, you'll be seeing me again. Chill.